Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode. How you doing, buddy?
Good. How are you? Happy Monday.
Happy Monday, man. The Yankees lost 2 out of 3 to Toronto. I'm not so happy. They're terrible. They got, I don't know, their payroll is so high. I can't even believe it. It's so frustrating. It's so frustrating. Anyways, this market is on fire, huh? This market,
Yeah.
400 is a big level. Took off here. We are pushing that. We talked about it last week, where the risk reward. The way we're framing it, we saw 405 to 410. It looks like we're right around here at these levels. They look strong. The stocks looks pretty strong. There's some weakness I see in names that maybe call it the fantasy names. I don't see them going rah, and so I do see the big names, the names we've been talking about: Apple, Facebook, Google, Microsoft. These things they look explosive. So we'll go through a couple of these a little bit later, but I just wanted to sort of, again, let's frame the what we're looking at here, and possibilities, and what to think about, how people should be looking at it themselves. We have here, let's get a little bit bigger, and then let's go here. So this is the SPY, and you know what? Let's do a little bit closer because we can't really get to the nuts and bolts, but let's call it, instead of 1 year, let's do how about let's do the last 6 months. We know what's happened over the coronavirus, and so we see here that the market has really taken off here. The annotated here, I'm looking at the reason I said 410, just to give you an idea of
Yep.
how you can look at it as well. As I was looking at 370, call it 371 here, and I was looking at 396 here. Okay, 371, 396. Then I was looking at 380, call it 383 ish, right? 383 ish. So I have 371 to 397 is how much?
26.
26 plus 383 is 406. 409.
Yep.
Okay, so you're right here. So it would be something, I was looking at this setup where we'd come here, we were around here, and we think, okay, in a breakout, this thing could really start catching legs, and you might see a quick 409, 410. We're close. That doesn't mean we can't go to 420. I mean, the way this thing is moving, it's I think you got to be very careful, and I think that it's, I would call this almost a mini crash up, right? This is going from 385. If it hits 410, that would be 15, 25. You're talking about a 6-7% move in 2 weeks. It's a lot. That's a lot for the market, for the S&P 500. So this would be a little bit of a mini crash after people got short, or got out of some positions here. So this is interesting development. I would make sure that you're watching this level for, call it 40. When things are moving like this, it can be 408 to 412, something like that. But that 1% right around this target is definitely something to watch here. So I'm keeping an eye out for sure on that. I see the numbers that came out on Friday were explosive. People were saying that the next 2 numbers like that are going to be explosive. All that's being built into the market right now. And but then you see on the flip side, you see what they're doing to bonds, and bonds are getting they came back a little bit here, but they were getting hurt earlier today, still down 0.5%, 60 bips, and still trading at these relatively low levels. So, excuse me. What I just go back to what we've been saying for the last 4 weeks about the market and sort of what's happening. If I was to tell you 2-3 years ago, what are we scared of? What are we looking for something terrible to happen? It would be China buying everything in sight in commodities, pushing prices up, China selling US bonds, right?
Mhm.
And what are you seeing now, right? You're seeing we have this inflation with the commodities, and bonds are being sold off, and I don't know what it all means, but uh, there's that 1 to 3% of me that says, "Are we already in financial war? Like this is like a financial war, not economic war, maybe a prelude to something much bigger." But it's two big superpowers fighting each other. I don't think we're standing still. I think we're trying to destroy China's bonds and just say, "Okay, we're gonna inflate, do our best job to inflate, and just throw dollars away." And I don't know what it all means. I think history will sort of play itself out here, but it's pretty interesting what's happening. I'm not sure. I'm still not in the camp that I believe that we're in this inflationary era where it's the good inflation, the inflation that we're causing it, that because you're working, I'm working, the next person's working, we're all working, and we're in the business of producing or making something happen day in and day out. That's not really the inflation we're seeing just yet. It might be, but not just yet. And we are seeing the inflation from the commodities going up, which is Chinese buying and the outer world buying these commodities. So there's something a little bit off in the whole grand scheme of things, in my view. The number of jobs that came in, it was 900,000 or so on
Mhm.
Friday. A large portion of those jobs were not the big manufacturing jobs or the big jobs where it's service jobs. It was jobs, people waitering and people working as a bartender in public in those types of service and recreation areas. There's nothing wrong with obviously working at any place, right? I mean, working is good. But I think, what ultimately causes inflation is when you see manufacturing working, service, banks hiring, everybody's hiring back. And I'm not sure you see that. So I would, in the back of my mind, this is a tsunami coming, and it's great that the market's going up, but I think I gave you an article about risk and talking about risk last week. In the back of your mind, it's good to be skeptical here. It's good to be vigilant in what you're looking at and how you're trading this thing. I think there's a lot of danger underneath the hood. That being said, we're still really long and winning picks, and we're like, I keep thinking, I'm here trying to pull the trigger. I don't want to chase, but I want to protect, and I'm hanging by a thread here. I'm interested in puts. I've been looking at puts probably all morning, or most of the morning. I'm looking at what's the right put. What are we looking at? It usually markets don't do this and then immediately just fall off a cliff. There's a lot of put buying you see in the day trading and the weeklies that is catching up. So what it usually does is it does this and maybe dances around a little bit, maybe one more push up and then down. It's usually, unless there's news that hits, it usually doesn't go straight up and then straight back down. That would be a disaster for a lot of
Mhm.
people, but usually doesn't do that. The other thing I wanted to talk about today, I saw a great article. This was a great. This is a fantasy. I don't know what to believe. I like reading these articles, and I like seeing research or people's thoughts and how things are put together. I started asking myself today. I wanted to look at one piece that it's on Tesla. I think it floated around the week before. I happen to see it. I happen to see it this week. So, did I give you this link?
Yes,
You
it's down
should
in the
put this on the
description.
thing so everybody could
Mhm.
see. Okay, so everybody can watch it whenever they want to watch it. It came out last. It looks like April 1st here. Okay, it's called the Robotaxi Repo. Okay, and it's a great. It's like a really really good piece. They try to put it in simple terms. It came from this site, The Last Bear Standing. When I read this in my mind, I thought, David Einhorn, is that you? Is that what we're reading here? Like, because he has been in a war with Tesla, obviously losing, and maybe he's still there, but he's put this research here, and I think it's really really good read, and it's well thought out, and who knows if it's right or wrong or what's the real scoop, but the reason I'll tell you why I thought of David Einhorn. Um, it starts with a little bit of background, which talks you through how the Model 3 arrived and the amount of pre-orders it had here. We're back into 2016. By 2017-18, they started selling these and delivering them. They were eating up their backlog, and production rate was high. But they're saying that by 2019, they were saying demand had begun to wane and inventory was building up. And it's this area right here, the Fremont factory, that David Einhorn has been publicly asking Elon for a visit, and Elon saying anytime, and Einhorn took him up. I don't think he ever got there, but Tesla was forced to export Fremont production. So this is interesting part right here. It talks about how something is changing, where they started shipping Model 3s from the United States to China, and China was stopped in Chinese customs. It talks through here. It's interesting. This is an interesting part of the story. And the question he asked here, whoever wrote this, is if Tesla had ample U.S. demand, why would it begin exporting into a place where there's a lot more challenges? And in fact, they were already building production facilities in China. It's like, why start importing there? He's alluding to the fact that there was no demand, that inventories are increasing, days of inventory increasing from 19 to 30 days. So things were going unsold. And the worst thing that could happen for a growth name is to see inventory start piling up and demand not there, because you need that growth for the next 20 years to substantiate your evaluation. So he's asking the question, why? Now, mind you, this is 2018-19. We're in 2021. So it's trying to figure out why now? What's immediately when I see this, I said, okay, this has been going on for a little bit of time. I got to imagine. He goes through here. This is a great, for what it's worth. It's factual, and he puts a spin on it, the writer. But you're talking about key departures, right? Key management departures. You have a first quarter chief accounting officer, another chief accounting officer's replacement, VP of legal, vice president of legal here, and then the CFO, general counsel. A lot of people leaving in 1 year, right? A lot of people leaving in 1 year. And Tesla takes down a write-down, $500 million write-down on revenue based on adjustment to sales return reserve under its new lease arrangement. So they have this new lease arrangement, which he's then going to harp on here. But essentially, he's basically saying, why so many people leaving here in this year? Accounting, legal, accounting. When if you've been around for a while, you remember Enron, and Enron was one of these types of companies that was loved by Wall Street. Stock was zooming higher, and then it collapsed, and it showed that there was massive fraud in the name. So when things collapse, it's not every day that the SEC is holding these managers accountable, any managers accountable, really. I mean, how many times do you see the big CEOs, CFOs go to jail? But Enron, the guy Skilling, went to jail for 12 years, for perpetrating fraud, essentially. And so when you're seeing this, the shorts see so many of these high-level people leaving, and they're thinking, why is everybody leaving at the C-suite, in the C-suite? Why is all these people close to Elon Musk leaving, right? Is Elon Musk asking them to do something that they may not want to sign off on? And remember, the people who sign off on whatever it is that they're doing, they go to jail if it's fraud. So Elon's just saying, hey, we need to get this done. Like, you're part of the company. People leave. That's what they're alluding here by showing these key departures. Okay, so it is factual. It has happened. That's his side of the story. Now, if you asked him, he might have gotten married and made $1 billion and said, I don't want to be here anymore. This guy came in and said, you know what? I just don't want the pressure of this, blah, blah, blah. Everybody has their own reasons, but factually, this doesn't look so good. Okay, so he starts talking about this new lease agreement. This is where it gets really interesting. So Tesla's two lease arrangements in theory. The lease structure here, and then this is a new offshore lease accounting structure. So basically, they lease a car, and $50,000 goes to Tesla, and then after 5 years, they have this buyback obligation. So they'll buy back the car from the person who's gonna lease it for $25,000, right? Now they can't, in this accounting structure, they can't take $50,000 is not revenue. It's not like it's your money right now, Tesla's money right now. What they do is the way accounting works is they allow you to take 5,000. 50 minus 25,000 is $25,000. So they take over 5 years, you're allowed to take 5,000, 5,000, 5,000, 5,000 one more time in the last year, 5,000. That's how you get your 25,000. And then you got this buyback obligation, which you're taking the 25K from the 50 you took in. Okay. That's generally how it works.
Mm-hmm.
Okay. What they did was they changed their accounting. They changed their accounting right here. Right here. They changed their accounting. Okay. Everybody leaves. They change their accounting. Okay. And they try something new. They basically say, we're going to take the 50,000. Okay. We're actually going to transfer the title, right? Transfer the title. Okay. Which means we sold the car. We are going to continue to guarantee $25,000 back. So we're leasing the car just like we did over here. Same thing, but this time we're going to give you the title. We're going to take the $50,000 as revenue. So Tesla looks like they made $50,000 per car. Now, in 5 years, we have this obligation to buy this car back at $25,000. Essentially the same thing. But the difference here was they basically said there's this expected resale value. What does that mean? That basically says, and we're gonna read a little bit about it, but it basically says that Tesla is allowed to come up with some valuation of what the car that they leased with $50,000 and took as revenue, what the car is going to be worth in 5 years. Okay, what it's going to be worth. If it's going to be worth more than $25,000, well, then who in their right mind will actually sell us back the car at $25,000 if it's worth $35,000? Okay,
Mm-hmm.
and that's what this sort of expected resale value, new accounting sort of done. So what it does is it says on a quarterly basis, Tesla assesses the resale value and adjusts its sales return service to write off revenue. So if they assess the resale value as 50,000, then they don't have to write off any of this revenue. Okay, so they don't need reserves. This is important. Okay, this is important. This is just an accounting thing where here you're not allowed to take the $50,000 in revenue, and you can only take 5,000 per year, and then eventually this cancels the 25 cancels the other 25 out. Here you're allowed to take the $50,000, and when time comes, you're gonna basically have reserves. You're supposed to have reserves in order to pay back the 25,000. Okay,
Right.
That's what's supposed to happen. Now they go through. They pull out the new accounting sort of language, and they go through all these different points, which I'll let you read. And it's interesting. It's sort of basically saying we're going to determine what the price of the stock of the resale is every quarter, and you can only do it. We're going to do this with international customers only, right? So it's only for international customers, this accounting thing. And you have to go through this specified commercial banking partners. Like this is very specific on how this is going to happen. Okay. So this person writes, they write, there's just one problem, cars depreciate, right? And the minute everybody knows if you buy a car, first thing happens, you run off the lot, you go 1 mile, you go back and say, you know what, I don't want the car anymore. They're not going to give it full price. You just lost $15,000, $20,000 off your car. So cars depreciate over time. Okay. That's what he's trying to say. And essentially, it just talks about another repo, typical financing, but it keeps going here. And it then talks about this appreciating asset, which I didn't understand, but basically it's Elon Musk's tweet in 2019. And it's saying, buying a car today is an investment into the future. I think the most profound thing is that if you buy a Tesla today, I believe you are buying an appreciating asset, not a depreciating asset. The cars currently being produced with the hardware currently being produced are capable of full self-driving. Important sentence. I was trying to understand, what did he mean? He's a smart guy. How could the car be appreciating? How could a car go from 50 in 5 years be worth 100 or whatever he thinks it's worth? Okay. So he writes, Another tweet, that's what they put, if, because I guess people were asking that question, if we make all cars with FSD, which is full service driving, package self-driving as planned, any such Tesla would be worth $100 to $200,000 as utility increases from 12 hours a week to 60 hours a week. And I just thinking to myself, what exactly does that mean? Like, what is Elon trying to say, right? And essentially, the 12 hours to 60 hours got really said what I needed to hear. Essentially, when you think about robotaxis, essentially it's basically saying, hey, you can buy the car today, you're buying the frame, but remember, you're also buying the package of the FSD, which we're going to be able to upgrade the software over time. As it works better, we're going to upgrade it. And basically, because you're going to buy this car at 50,000, well, in 5 years, you're going to go to sleep, and you're going to allow the car to be a robotaxi while you sleep. It's going to be making you money. And anything that's making you money is actually worth more money than when you first started. And so this is the thought, right? It's the robotaxis. There's going to be millions of cars out on the road that are that don't have drivers. And so I believe that's what he's trying to say, because I was really thinking about what exactly does this mean? So this is robotaxi, and robotaxis clearly have an expected value resale higher if it's true. Now, it goes into all of this, and it goes into the financials on what he's doing, and I think it's worth a read to see where they were actually putting this. And you start looking at this, and I think if you have an open mind and you're just not blah, blah, like, I don't care about anything except, Elon says it's going up, ARK says, Kathy Wood says it's going up, it's going up. But if you have some, you want to think about something logically in an investment, and you're looking at this and you're saying, this doesn't sound right. And he goes through the numbers. It's really, really interesting how the numbers dramatically improved. It calls it the new regime. You could see how the deliveries, these are car deliveries, how they went straight up. You could see how things were a little choppy here, and then all of a sudden things went up. And you can see here how things are improving in net income over the next couple of quarters. He then asks great questions here, which I'll let everyone look through it. But I think what's really interesting is, essentially they're saying this is the fraud, right? Now, the longs, I started thinking to myself a couple questions. What are the longs going to say, right? What are the people who are long Tesla? And I think the first thing I'll say is, this is 2 years old. Like, everybody's looked at this already, right? Everybody has seen this and looked at this. It's not something new, right? And the reason I said did Einhorn write this, was because he was pushing this Fremont production. He was all over this Fremont, and so it's done very well. And I think that you got to look at it, right? You got to look at what you're seeing in real numbers and saying, okay, here are the facts. Forget what people are tweeting, saying, and pushing their names. You just got to look at the real facts. I looked at that and I just thought, wow, that to me, that sounds funny. So okay, so I'm a long now. What does the long guy say? Well, the long guy say, it was a year and a half ago, 2 years ago. There's nothing to see here. They already looked at this. If there was something there, they would have found it already. Okay, so there's nothing there. That's one. What else might they say? I don't know. It's just, hey, they had raised $10 billion, I believe now. So even if it was true, and in 3 years from now it's 2 years have passed, maybe 3 years, 2.5 years, they're going to have to buy these back. They have the money now. They raised so much money, right, with the stock much, much higher, that they actually got through the fraud, right? They used the fraud to be able to raise money. They have the money, and now they can actually pay off. They really can pay off what they've actually might have to write down. Eventually, if there is no autonomous driving, there is no robotaxi in 3 years, which we'll get to in a second. If there is none, then they could actually, they're going to have to buy these back as a guarantee. The question still stands. Who's actually buying these? Who is this bank, this financial company that's doing the transaction? Where are these cars going? Where are they sitting? Is it just an accounting transaction, or did real cars actually get shipped somewhere and they're sat somewhere, they're being used? I don't know. And I think these are questions that this person is asking. The last thought I had was, why am I seeing this right now? Why April 1st? Why did someone put this in front of me, and why is it getting some traction or being sent around? And then I think back, only a week and a half ago, this is me connecting dots. Only a week and a half ago, 2 weeks ago, we saw a FSD, we saw a video. I showed you that if you watch, you should go watch it. I was shocked. I'm a believer, like many people, of autonomous driving in the future, and it's going to happen. And you're hearing Elon Musk talk about it in 2016, 17, 18, next year, 2 years, 3 years. We're going to have this 4 years. It's 5, 6 years later since he first started. And when I looked at that video, I was shocked. It was clear we're not even close. Okay. And he immediately damage control. Tesla came out. Elon Musk said, "Nah, we got another video coming out in a month, and everything's much better." And I hope so, because that video was pretty scary, and I can't imagine there's millions of cars floating around driving the way that car was driving. It'd be a lot of it doesn't seem that it would be something that would be a viable solution for what we're looking for. And I was surprised, frankly. So now I'm connecting the dots. That a week and a half ago, this video circulated, and now people are now harping on this, saying, "Look what he did here," and that he's actually lying about the technology. And he lied his way to basically get to this point. But as you know, a lie can only go so far. That's what this report is basically saying. That's all I know. I'm not long Tesla. I'm not short Tesla. Right. Mainly, we have some mark puts, and we don't even have that much. We should have been out of most of it, if not all of it already. But so maybe I'm short a little bit of Tesla. But I'm not comfortable after reading that story that there's everything was always on the up and up. And so I would invite people to read that. I think, people are always asking me, how do I research things, or how do I think about things? Well, that's how I do it. I read something. I don't believe everything I read, and I try to take the facts out of that and then say, okay, well, what are the facts? And these are the facts, and I'm looking through it. And I do that as much as I can with all the stocks that I look at, which includes names that are, you see, we put out videos. You get hate mail if it's talking about, let's try to be realistic about a particular name, because I know the story. We get the story, but the story could be a fantasy story here. And what does it mean to the stock? So, this is a great read. This is a hedge fund, someone in a hedge fund world writing that. This is, or likely, I would say likely, I'd bet on it. They've put it together very nicely and easy to read. And it's not flattering. It's something that people are going to start talking about, and I guess maybe asking their own questions, or forcing them to ask questions, or maybe Tesla just doesn't answer anymore. They don't need to. It's something that we did, and it's, unless the SEC looks at it, and maybe the government doesn't want to take down Tesla because Tesla is such an important piece to an EV story. So maybe nothing comes out of it, but at the end of the day, it's great. It's a great piece, and I want people to read it with eyes wide open, making up their own minds. You still love it. After that, you're saying it's old news and we're going to get long. Great. But I think it's worth a read. And if you go through it, I think it's awesome. And then after that, then you can look at the risk reward. And then you go back to the technicals, and go back to the options and the plays and whatnot. So that's, I just thought that going through something like that is sort of my process on how I look at these names and what I'm reading, how I'm reading it, how I'm digesting it, and being skeptical about the skeptics, right? This person clearly wants, Elon Musk to go to jail, essentially. Okay, there's no doubt that's what he wants. So he's probably short the stock. So I understand that, and then the next person, Kathy Wood is saying 3,000. She's long the stock. She obviously wants Tesla to be great, and she wants that fantasy story to go through. So either one might be a fantasy story. We're trying to figure out, story, what does it say? What's this, the saying? There's your side, my side, and the truth. There you go. That's right. There's three sides to every story: your side, my side, and the truth. So we're trying to find what the truth is. All right. So that's a few, to start off the week. I just thought it was great reading. But let's take a look at some VOA. I guess the one that I focused on, and you tell me if you've seen it, the CCL and NCLH. Did you see those trades?
Yep.
So those are good.
All right, good.
You all right? Can you see?
Sorry, my camera was a little blurry. Cool. Yeah, before we jump into those, guys, make sure you like the video and subscribe if you haven't. It really helps us out a lot. And then comment down below what you think about this whole story. It's pretty interesting.
Yeah, so let's look at so what do we say? CCL. So CCL's got these earnings. Stock's doing well. Let's take a look at CCL here. stock a little gap here today. So, I would, this is a name that, it came down pretty hard. It's come back here with the market. Uh, it looks actually pretty good. And they're coming after calls. Let's just frame it here quickly, because we've done this in the past a bunch here. But essentially, we're looking at sort of these types of levels here, sort of like an 18 to 24 to 30, which is perfect symmetry, right? 666 all the way up, and then you even got 18. Wow, look at that, even 12.
Hmm.
Okay, it's a little 12 there. So 12, 18, 24, 30. And we have earnings coming out this week, and people are looking for a big push here, I guess, towards the highs. Let's take a look at what we got here. CCL earnings this week, and you're looking at the 29s, 34,000 options have traded. People are loading up here. They've been doing it since the morning. And the stock is finally, it traded a lot higher with all the options volume, and then came down as it sort of trickled along here. Okay, so they are buying, you could tell they're buying these here, and they're buying it for earnings. It looks like the highest prints were in the 80 vol. So 72, the vol's up 15 handles today. So in this particular option, so you could tell that there's demand there. Where do they think it's going? You buy that for, right now for 50 cents. What is it, 31 maybe? 31, yeah. So even 30, no, 30 is no good. 31, 32. So the 31 level is sort of what they're looking at, and 31 would be a breakout. So if you get that breakout, you can get to probably closer to 32 and a half. So I think they're playing this breakout here, 29. They're buying this, paying, what are they paying, 70 cents, did we say before, in the morning?
Yep. Mm-hmm.
I think 70 cents.
Around 70, yeah.
Yep, all around 70 cents. Okay, call it 65 to 70 cents. So they're looking for 31, and they're looking for a breakout above 30 here. So people lining up here. I also think it's, it's one of those things where I don't necessarily like playing earnings like this. I don't like it because it could just be that someone is letting some stock off and buying these calls just in case you get a breakout. But they might be looking at, say, all right, I'm going to take. They've been buying the stock all the way from down here, so you get the next earnings April, January. So the last earnings was somewhere around here, and is that right? 1, 2, 3. So you're earning somewhere around here. So, if they're buying it over here in the 20s and it gets to 28, I mean, and you're going right into earnings, looks to me like a good trade would be to sell stock here and buy those 29s for 50 cents.
Mm-hmm.
Right. That to me, that makes sense. So I'm not, again, and the stock jumps up here. I'm not, I hate coming in for this, just what do you think about earnings? How do you play it? If you wanted to play it, this is not a bad option. It's not a bad option,
Mm-hmm.
but I'm not sure following you away here is sort of going to get you any edge. I'm not sure that we know for sure whether or not this is just a chip that they're throwing on the table to sell their stock or not. So that's something to look at. But I think interesting also, just we did it with UPS and FedEx.
Yep.
A lot of times because CCL, NCLH, RCL, they're all essentially in the same stocks and cruises. And if CCL starts talking positive, all these other ones are going to be up significantly. So you see that they also came after Norwegian Cruise Line, 30 calls here just to play a potential good news in CCL. So I just wanted to show you how, if you were quick, they probably did this in the morning too. These things went to 30. Okay, so they bought them quickly right out of the gate. It's 50, 40, 50, 60, 70 cents, and try to ride them. But the stock came down by 11 o'clock. They got to about 80 cents as people started thinking the same thing, that they're going to play CCL. So this was a quick out of the gate buy. Eventually, the market makers brought the vol up here, brought it down, and then people continue to buy it. So the market makers are simply just moving the options up here. You can see with this moving it up as people are setting up for the CCL earnings.
Right.
Is that fair?
Yep, definitely.
So something to look at. I would, again, CCL and NCLH should have similar looking stocks. Although this is a little bit wider. But I think if we go back in time here a little bit, we're seeing the way we framed it. It's steps, steps, steps. Here's a 34 breakout step, gets us back to 51. Things have to really open up for these guys, and everything has to go smoothly. I'm just not sure. Just hearing the CEOs speak, they're excited about it, but I think the reason why it's not going up as much as getting back to sort of where normal was is because there's still a long ramp, and they have to do a lot more marketing. They borrowed
Right.
money. There's a lot more cost structure built into this. The boats can only be half full, right? So you're like half full, same amount of cost almost as far as fuel and everything else to move these insurance to move these boats. But you're only getting half the people on it, and the marketing to get the people on it has to be, probably triple to make sure everybody understands it's safe and what they're doing.
Yep.
So there's a lot more costs. It's not the same business as it was back before. So I would say it might take a little bit longer to get back to 50 here.
Mhm.
So that's that. That's that. What else are you seeing?
Definitely. I've been seeing some retail going on, like Gap, Walmart, Macy's. You wanna head into that?
Okay, sure. What are you seeing? Let's just take a look at Walmart.
Hmm.
Walmart, I like Walmart long term. It didn't work out for a few months, but Walmart's a place that has
Yeah.
it's ripe for the moment. There's people are shopping at Walmart. They're getting checks, and they need to go shopping with the checks to eat food and get
Mhm.
basics. They have a lot of data. They're competing against Amazon in the Prime space and subscribers, and that was all good. And again, the AI works for them. They're doing things like healthcare, so they're trying to compete against Amazon. Not always going to work. I'm not saying that that's like, but I think there's enough room for Amazon and Walmart and Target. Really love
Yeah.
Target as well, but that's just off to races. So Walmart, they're probably buying calls. I don't think people will be buying puts here in Walmart, but it's a solid name. It just the earnings they were everybody was very juiced up for good earnings here. Earnings were bad, and stock traded off to 126. Trying to make a comeback. Let's try to frame it quickly. This one just seems that it's sort of 152, 152 and a half. This is it's got a recapture, so that 144 level is going to be a
Hmm.
if it recaptures that, you could probably get it back to 152. But that's going to be this is tough. I mean, you're talking about 3%, and this has a beta to the S&P 500 is it's like one. I mean, if it's going to trade very similar to S&P 500, let's just say that. I think looks like 126 is a level, and it's about right here. It started over here. You had probably it's doing this dance around Corona and stuff. So call it right around here, 115, 116. So I'm looking at 126, 152. We're right in the middle. Um, just by looking at it, I would probably say call spreads maybe, but what are they doing?
A lot front week, but also some in earnings in May.
Gotcha. So front week stuff, just because it's probably moving here.
Right.
Um, 140. Okay. I don't know what that is, but that seems like maybe it's shuffling risk reward, or it's actually getting out of it. The maze, let's see here, 60, 145, 150, 6,000, 6,000. Is that spreads? No. Okay. Call buying. So it looks like that's call buying there with the IV going up. And this is some call buying with the IV going up. So maybe they're buying both here. Maybe they're buying both here. The 145s, 150s, maybe even selling some of these, selling this to buy this. But the 145s, 150s, I mean, the question is, can Walmart get there, right? Can Walmart get to 160 by earnings?
Hmm.
I can't believe they missed. I can't believe that this was disappointing. If this wasn't disappointing, this stock would be trading 160, 170, going in that same pattern. This does a lot of damage here. You could see how much stock traded. It's 32 million shares traded right here. There's a lot of damage done here. A lot of people buying stock here. So it mutes the upside. I'd be hard pressed to think that it's going to get through 152 in one shot here, but I could see I can understand the call buyer. So, uh, what are those called? What is this? The one where are we? The 140s. So we're looking at a target stock price of what? 155. 140. So let's call it 155 for the 145 calls.
Mhm.
So 155 somewhere up here, somewhere up there. Can it get that? I mean, I could see it. I could see it. It's got to get to 141 through get through this right here, 144. It's going to need a blockbuster report. But maybe that's where people are spending money. You're hearing a lot of people talking about that the stimulus checks didn't actually get into the stocks the way they have in the past. That maybe people are actually doing the right thing and buying food for their families and
Right.
buying for daily products they need. So maybe that's where the money's going. If it's not going into the stock market, maybe it's going to Walmart. So I could see a blockbuster report, and maybe the money went right there. So that's interesting. What else have you seen in retail? Because I've seen, frankly, and this is also interesting to Walmart. I've seen put buying in the last 3 days in a lot of these retails. Not a
Mhm.
lot, but sporadic put buying, which you don't really see that much, and it's just been in a lot of little names. Not a lot though, but I just see it, and people are lining up for some puts. So Macy's is something that we were seeing call buying here. Broke through this level. You would have wanted the stock to hold here. The
Yeah.
fact that it didn't hold and it's trading under the 50-day, and it's still trading okay. It's kind of hanging by a thread here. But one thing you don't like. What do we always say? You got to respect the V, right? You got to respect the V.
Mhm.
And to me, that's a V, right? That's a sharp rejection. This is again a sharp rejection. The market has told you twice, get out of my house. This is not, you don't belong up here. Like you don't belong in the 20s. That's what the
Right.
market has said emphatically over the last 3 months. You don't belong up here for whatever reason. We're going to sell it to you. We're going to sell it to you in big size up at 20. And you got to respect that. You got to respect that statement here. Can it get back to 17, 18, 19? Does it want to try test 20 again to see if it gets there? It's doing this up and down dance. It's also saying, yeah, but we like it here. So we hate it here. We hate it here. But you know what? 114, 115. You know what? I kind of like it. Kind of,
Right.
the big guy saying, I'm going to buy some here. I'm going to keep buying it. We like it long term. Breaks this down here. It's going to trade 12. I don't know what they're doing. What are they buying calls?
Yeah.
17, 16 and a halves.
I think
Probably
they're
buying
rolling.
17, 16
Yeah.
and a halves. Okay. So they're probably buying something here, calls to probably play an upside back towards 20. What are they buying? Let's take a look. Sorry.
April 23rd, take a look at 17 and a halves.
April 23rd, 2-week
Yeah.
options. That's
Mhm.
interesting. 2-week options. Wow. 17 and a halves here for 2 weeks, 41 cents. They were buying something else, weren't they? In Macy's, maybe? Where's the open interest in Macy's? They were buying April 9s. They have some. The
May
Mays. They have
20s.
some Mays. They have the Mays. Okay, so I have some Mays here. Looking at Mays because they want the earnings. Okay, let's go back here. So they want the earnings in May. Right, these right here. Okay. Yeah, so we've been seeing them buying calls here. And I don't know why 2-week calls. Somebody would have to tell me why 2-week call options. And they're buying these just to check. 43 cents, 73 vol. The vol is 72, up 6. So the vol yesterday was 66, 67. Today it's 72. So this is what they're paying. 73 vol, 72, 73. Here's a little 68, but it's in the 70s. So they were buying these. They were bidding. They're buying these and bidding them. Buying, bidding, buying, bidding. And stock traded up. And then after they bought the most, the stock traded back down. And now it's kind of flat around 50,
So
70. So
you also see their
go ahead.
spreads, right?
Let me see.
You can see their spreads, yeah, when you scroll down.
This one?
Yeah, that one. Those are spreads, and it seems like they're spread with
Oh,
April
you're
9th.
right. You're right.
April 9th. Yeah, take a look at the same strike.
April. Oh, so this
Yeah, so they
week.
might be rolling up.
Okay. Good catch. That's a great catch, Marco.
Mhm.
Great catch. So the
Yeah.
17 and a halves, right? The 17 and a halves. Okay, that makes sense. and it looks like 8 cents. So they're selling these. They're selling these, and maybe selling them. Hold on 1 second. Let's see. 84. Interesting. I'm gonna go with that they're buying. They are selling these to buy the other ones. That's what I'm gonna
Right.
go with, because the other these are such a small they're small. They're pennies, 7 cents, 8 cents. You can, the reason why you don't look at 1 week volatility is because one penny could be, 2 vol points. So it could be a lot and could sway sort of that vol analysis that we do. But the other ones look like they were buys. So this looks like it's just selling to buy. So, okay. So somebody's taking a shot here on the 17 and a halves, thinking, 18, 19, basically going right back to this, doing this triangle dance up here. I wouldn't say it doesn't seem to me like it looks like more of a trading call than as opposed to something that is, they're setting up for a bigger trend. I don't know. I'm a little lukewarm on the Macy's after it's done this damage. I'd like to see it hold, probably get a little bit more warmer fuzzy feeling if it got back to 17 and a quarter, and then you start thinking, okay, now it's going to go up a little. I'd rather I'd rather buy it on the way up than buy it down, because if it breaks here, this is lost.
Right. Okay.
Okay.
Last one I've seen was Gap.
Gap
from
stores.
retail. Yeah.
So Gap is another one that we've seen. The last time we saw call buying, they did well, but it also was, I believe, against stock here. So they were buying these calls, stock traded up, and it looked like they had sold some stock here. So these calls here, what are they doing here? April 16th.
Looks like they're rolling up in spreads. Yeah.
Gotcha. So it looks like it started here. So they're selling these and then buying the 29, 32 and a half. I would just by looking at this, it's not like it's, when you're rolling up a spread for $1, it looks like you're just trying to take money off the table.
Right.
So one, the spread is telling you that they're capped, right? That they don't think this is explosive, right? That's the first clue. I'm buying, and even if I buy 8,000, 29 and a half, 32 and a half, I don't think it's explosive. Clue number one. Clue number two is that they're doing the 28 and a half, 31 and a half call spread. So they're selling this one, because we know that they bought these. They're selling this one to buy the 29 and a half, 32 and a half. So that means that they're taking a few pennies off the table, which means that they're trying to take their money off the table and leave just a little bit left to see if they can make more. It's not ho-hum bullish. It's not like, I'm not going crazy thinking this guy thinks it's bullish. I don't think he thinks it's super bullish. So it literally tells me that he's probably getting out of the stock and he's rode the name all the way up, and he's getting out of the stock, which goes with what I'm telling you. I've been seeing not that it has to be super negative. It's just not as super positive. Down here, we were seeing call buyers, a lot of big call buying. Here, we're seeing call spreads. And I'm telling you, I'm seeing put buying in a lot of little names in retails over the last week. Let's call it the last 3 days. So I think it's, when they start selling, or they're getting out of, they sold Walmart and they rode all the other retailers up, right? When they're worried about the market, the big guys, they go into the bigger names. They go into Walmart, right? Because Walmart's a bigger name. It's thick. It's not going to go out of business, And so you got to think about that. When you see people coming into Walmart, they're either coming into Walmart because it's all of a sudden it's this growth stock and it's good, or they're coming into Walmart because they're concerned about where the economy is going right now, and they're probably moving out of some of their other retail names. So that's how I would, in the back of my mind, I've been thinking about it. Okay.
Yeah, that's great. Yeah, I like it. What else, you got anything else? Like, I've seen some Facebook.
I see. I was gonna say, look, we've been talking about Facebook here for a little bit of time. I think some of the people on the podcast watching have gotten into it. We made a big statement here, 270-ish, 265, where we thought 330, 340 was possible, and I think you're seeing that. I think you're seeing, once one of these large types of plays breaks out, we were looking at this and we were saying, Facebook's in here for 6 months doing this, doing nothing. And then, we're seeing call buyers in the 300 range,
Mm-hmm.
right? We're seeing this call buyer and we're talking about Facebook right around here, and we're saying, people are really coming after these. And not only that, but what was the big part of the story was we're seeing different types of investors in the name,
Right.
right? We're seeing momentum investors, we're seeing value investors, we're seeing, value investors and momentum investors generally think about things very, very differently. And when you start seeing both of them in the name, you got to think what's really happened. This could be a really interesting situation. Because you got value guys coming in at this level, and then you got momentum guys that see something. Maybe it's the advertising that's going to start pushing the numbers. They actually had a good quarter, and the stock didn't do so hot.
Mm-hmm.
And now they're coming into their next quarter in the next month. Again, the same thing. We're looking at. We said from here to here, people were paying $10, $12 for the 300 calls out into May for earnings. That meant 33 to 40 bucks we were looking at. So we're talking about 10, 12 to 30, 40, which is about 330, 340. That's how we got our 340 range. It had to get through here first. And when it did, came back down and went through again. It just confirmed what we're seeing. So I'm sure you're probably still seeing call buying. One, because it's moving up, but just the setup is 50,000 here in May. What's going on here?
Mm-hmm. The 310s. Yep.
So there's a lot. Oh yeah. Okay. So we have the 295, 310. So the 310s vol is going up a little bit here. And for these names, it's very hard to move vol up
Right.
1.5, 2 points is decent. So vol up. Let's just look at the volume. Okay. A lot of spreads. 35, 36, 35, 35, 35. Okay, looks like that was I'm pretty sure that's going to be bought. And this is the 295 calls. Looks like at the same time.
Mm-hmm.
So 295 calls, they look like they sold those and they bought looks like they sold their 295s to buy the 310s.
Nice.
So they're just taking profits here. They're taking profits at 22 and they're buying the 310s. They might be buying even a little bit more, 6,000 to lever up and buy. How much do they buy here? 6,800. Call it 7. Yeah, they might even be doing a 1x2 or levering up, or 1x1.5. So they basically sell 6,000 and then they buy 9,000, right?
Mm-hmm.
Sorry, sell 6,000 of these and buy 9,000. Now there's another 300 here. I don't know what they're doing here. They might have been doing some here, and then this. But let's take a look at this. These are at different times. So it's maybe, I don't know exactly what they're doing, but the other one looks a little bit, I saw that it was closer with time. It was right on the same time. So it was pretty clear. 295, 310, selling, call it 6,000, buy 9,000, which is about here. Let's do it. Think about it this way. So you sell 6,000 times 22 is 132, right? 622, 132. And then you buy one of these, which is how many times do we say? Let's call it 9. 9 times 14 is 130, 130, 126. So it's very close. It's almost dollar neutral, right? They take out the dollars here and now they're buying more dollars here. Okay, so if you sold 6,000 of these and you bought 9,000 of these, you would essentially be doing that for very little. You'd actually be, it might cost you a couple of pennies. Okay, so
good, yeah.
295 to 310. So again, they're just riding the momentum here and actually getting a little bit bigger, which should strengthen the case that Facebook is, wants to go higher. We've talked, very positive about Facebook. We've talked very positive about the Google chart. And here you go. Here, the Google. This has been something positive we've been saying over the last couple of weeks. Facebook for a while. This one just recently. It's this line here. It just step. We did a review. If anybody hasn't seen it, the 50 episodes. Which, by the way, thank you. We're very excited about that. But we did this 50 episodes review, and I like to bring out some names that I very much like, and I think that the videos are good watches to see how we're thinking about things. And, I can tell you that in Facebook and Google, we did not, even though I like these a lot, we did not do winning picks just because the contracts cost a lot of money. So it's for, you got to be a big boy to play that game. It's, it's $10 to $20 as opposed to $2 per contract, $3 per contract. But nonetheless, I'll be here, telling the ones that I like, and I call it the way I see it. That's how. If I don't like it, I'll tell you I don't like it. But this one these look good. Another name that I would say, is the UMP. We talked about it here, and this is we talked about it right here, March 23rd, and I pulled it up for you here. This is a good video. It's we're trying to frame things. We're trying to. There's me wailing my hands there. It's funny, but you come over here, right over here on the Options Geek page. You click this. You type in UNP. And voila! Anytime we talked about UMP, it pops up. And I think, here's one, here's two. I think this was the same time, and this is the clip. But the reality is that there is a lot of good, solid options analysis and framing the risk reward. And the job for all of us is really to do the research and to find what might be the answer, or what's the trend, or what are we looking for, right? That's always, it's not, I wouldn't say it's the hardest part. I would say it's the part that takes a little bit more time and digging and reading, if you will.
Now, what do you say? Maybe tomorrow you dive in and show us how you do the analysis, how you do the research. Maybe show us some samples.
Yeah, I mean, we can do that. We can do that tomorrow. That's a good idea. I mean, maybe we'll take a couple names just to look. I mean, everybody wants to know exactly how I do it, and I can tell you it's a lot of reading. It's a lot of just picking articles, and read. For example, I'll show you one tomorrow. Microsoft. Love Microsoft. It's a name just love. It's, it fits everything we're doing. It's just, I don't know if it's options play, but I love the stock. And there's been more and more articles. So I'm reading about a lot of different articles, just scanning, right? I'm not doing deep fundamental research. I'm scanning and I'm seeing more and more articles on Microsoft, and online gaming. And then I see, okay, they made this deal a few months ago with Zen Media, something like that. It's a production company. They have a couple of games, 20,000 players, 30,000 players, and they paid $7 billion. And I thought to myself, before this bull market is over, these big companies are going to buy something. Okay. They're going to use their currency and they're going to say, we're worth 2 trillion and we can buy that company and it's worth $100 billion. It's nothing. Okay. We're going to issue some stock. We'll get it. And that's ours now. When I look at Microsoft and I see more and more gaming articles, I think, why wouldn't Microsoft buy ATVI? Why wouldn't they? Why would you mess around with 7 billion here, another 10 billion? Just buy the best gaming company on the block, has 400 million users around the world, hundreds of millions in the United States. Why not just say, I'm going to pay 140, for the stock, and it's going to cost us $100 billion. But you know what? We have Call of Duty, War World, we have Candy Crush. And we got all these studios, and it fits nicely with Microsoft Game Pass, which is what they want anyway. And then, by the way, just for fun, let's buy the Discord for 10 billion, and we got ourselves literally. We're so set up for one of the biggest trends over the next 10, 15 years. I mean, not set up like we're going to try to build it ourselves. We're Microsoft. Just buy the best. Like Disney, just go buys Lucasfilms, right? They have Star Wars and then they make everything out of it. Well, Microsoft should be thinking in that way. Why not just go buy Call of Duty? And you see Call of Duty could have so many branches, so many. If Disney was doing it, they would say Call of Duty. They can make 20 stories about Call of Duty, right? And same thing with War of Worlds. I think that Microsoft, that's how I think. So, it's like madness. It's a little bit of creativity. It's a little bit of thinking like an investment banker and saying, how can this company get bigger and better? And how can it, so that's what I think. Apple, why wouldn't they buy Pinterest? It boggles my mind. Just go buy Pinterest. It's nice. It's fun. It's everything Apple wants to be. Can you imagine the commercials of Apple and Pinterest? And I mean, it's like incredible. So like, to me, I just think in that fashion, I put myself as the business owner of these companies and try to figure out how can they become bigger and better? And then I'm trying to match that with what I'm seeing on the charts, and then I'm trying to see the options flow pick up. And if things start matching, you start seeing it better. So a lot of it has to do with reading. But I'll show you. We could go a little bit through it tomorrow. I know a lot of people always ask questions about it.
Cool. Yeah, definitely. Sounds good.
Awesome.
Sounds good.
Any
Awesome.
questions right now? I'll give you a couple minutes. I know I went over for a minute.
If you guys have any questions, quickly put them in the chat.
Questions. And going once, going twice. We'll save the rest. If you have a question, we'll answer it tomorrow. All right.
Okay. All right. Sounds good.
Time's up.
Thank you, Felix.
All right. Be good. Later.
All right. You too. Bye.
All right. Bye-bye.